Hello guys, welcome to the Train Parrot. It's been a quiet day. There hasn't been a lot of movement in the price, but it could be the case that that's maybe actually good. In a sense, if you look at the price action, we are sitting right underneath liquidity at 95. And I have officially given permission to Bitcoin to go ahead and take that liquidity. So it's just a matter of waiting now and seeing if Bitcoin is going to move from 93 and take the liquidity that ends at around 95K. We have seen a few occasions where Bitcoin has been right in front of the fist and it decides not to take it. It usually happens when there's something like a cold news coming out of the blue and tricking everybody. But if you don't get that really, it's pretty difficult for market makers to just let it go. There is a decent amount of liquidity there. And then we have liquidity at 100K. And since now we have the volume profile with cumulatives, you can see getting into 100K is around equivalent to getting into 82K. So that 76K, which is a lot more liquidity, it requires a way bigger move to the downside. Let's have a look at the momentum. Let's have a look at the daily. We got a bunch of things that we need to cover, despite the fact that someone might say from the morning to now, we haven't done anything. I think there's been also some news, some economic data that we need to look into and whether that is something positive, something that could help the price to continue in the way it's doing in here. As you can see on the daily time frame, there's really nothing to complain about so far. There's nothing that we can criticize about this move. We have already a breakout, a clean one, from bottom of the range. From a full global reset, we have reclaimed the red, the green, the yellow. We have retest, and we have 2 days in a row of upside momentum. So I feel still like what comes next is the retest of 90. I feel like we need to go and confirm that, but it's a bit painful to watch because, to be honest, there are some battles that we have just won. Yesterday, we closed right at the resistance of re-entering the wedge. Today, we have the responsibility, as I say, to not turn this candle into a liquidity hunt. I explained in the morning that turning it into a liquidity hunt means closing today below the breakout, below the neckline of 91.5. So far we are trading at 92, 93, and that is perfectly fine. A daily close there confirms the breakout from this double bottom, confirms that we are reclaiming the bottom of the falling wedge, and it also reclaims this orange line, which was pretty tough in this area to break below and to break above. Notice that there are some fake outs in here though. So that 91.5 is that orange line, and we have produced some fake outs in here with a big green candle that still got sold off into, what is it, that 76. So fake outs can happen, and from breaking above 91,500, they can easily squash you back down into 76. So do not take anything for granted, guys, because it's just Bitcoin. And Bitcoin, in this downtrend where we are still trying to find a reversal, trying to spot where the momentum to the downside is peaking. We're trying to see what happens with the MACD bull cross, with the breakout on the daily. Still, with all those checkboxes, nothing is guaranteed. So my wish for today is that we close above 91.5. Now, if we don't do that for whatever reason, the test of the 90 is my second wish. If we go to 90, let's confirm that there is liquidity there to buy it back up and to hold it. Basically, we need to show control. We need to show that we are in control, or, well, basically the bulls. On fair value gaps, we are just in the middle of nowhere there. Price hasn't yet decided whether we're going to consume all the brown fair value gaps sitting below the price that can take you where? Into 85 in a single move very fast. That's an area of speed. Or if we enter in the green ones on the top, there can be a very fast move. How fast? Well, look at the left hand side of the chart, see the candles coming down. That speed is more or less equivalent to what you should be expecting to the upside if we get into that area and if we go bullish. Then we have something I wanted to show you in here. So we are clear that Bitcoin lost virginity in here, right? So we pinch twice the pivots for December. We did it on the bottom pivot right there at 95. Today we did it at, 95, did I say? 92. The middle one at around 94. Tomorrow, ideally, we go into 96 for the point of view of the pivots. Ideally, we want to start moving this quickly because this is quicksand, right? If you look at what happened in the previous month, look at how perfect was this, losing virginity in this area. We did it just on the second day of November, and we pierced that by the dollar rejection. And that's how we got sent back into support. Both levels were perfect. The rejection was at $111, $100, and the support was at $98,894. Mwah, perfect. I give you everything CPR. It's amazing model. Is for free. You can find it on TradingView and set it to monthly. I have tutorials. You can find my tutorials in my playlists in my channel. They are all for free. Let's look at the liquidity, because the thesis of going to test 90, there is potentially driven by this liquidity that is getting very heavy, guys. So, good for breaking around that 93. Let's think strategically. Ideally, we want the price to close above 91.5 to prove the point, to prove that we re-entered that falling wedge, that we are able to go that way. After we do that, with a candle close daily, UTC time, someone was asking me what time frame, because Bitcoin is open 24/7. Then, coming back down into 90 after having had already a candle close above 91.5 wouldn't hurt that much, if we go into 90 and we take some of this heavy liquidity. That is a backpack that currently we are holding in our bag, and it's driving the price slow. Shorts are getting cocky thanks to all the liquidity below. It's a position of disadvantage for scalping. I'm not talking about investing or long swings, but having a 500K in longs in an area where, in a period of more than a month where longs have been decimated, is kind of a recipe for disaster. We probably want to clear that out. Just so you know, the red, the times where the shorts were at risk, that peak at 350, and now we are at 500. So that's a lot more than it's ever been since 126. That is what worries me. Not worried really, but that's what drives me to think that there is a chance that we need to test that 90. Doesn't mean that we are going to hold it, but that test must happen. Let's have a look at other things that I wanted to cover today. So early morning we had the negative funding rates, which I already cover. And with all this moving to 93, you can see that the longs have reduced to 58. You can see it in this white line in here. So that means that many longs have pulled out on all the swing up. Many are expecting probably to get that swing low. So if you focus on what happened in here with the RSI, you can tell that after that move there, we're probably screaming, please give me a pullback on the daily, and let's prove that we are going to put another higher low. That's it. I don't blame the price for doing that. That's just price action. That's not natural. And let's go into high block capital, and I'm going to show you what the shorts are, preparing potentially. As you can see, we have 1 point something holding the price at 92,500, but we are confronting a wall of from 93,500 into 95, or a couple of thousand, maybe 3,000, slightly more. So that is heavy at the moment. So that could put things a little bit against the longs. Now, not for necessarily for the long term. Obviously, it's just a swing, because we have a bunch of drivers that are actually pretty bullish. The general markets are doing well. I'm not going to cover all general markets. I spend all day in the gym, swimming and doing things, and I'm burnout. I had leg day today, so I'm walking pretty much like a parrot. Vanguard reverses ban. In a massive capitulation to demand, Vanguard, the world's second largest asset manager, right behind BlackRock, has reopened access to Bitcoin and Ethereum ETFs for its 50 million clients. We covered that in the morning. That's extremely bullish, and there was a lot of volume, historic volume, from them, thanks to the reopen. Then the Bank of America adoption. Concurrently, Bank of America has authorized its 15,000 wealth advisors to actively suggest Bitcoin ETFs to clients. Bullish. We have the Ethereum Fusaka upgrade, which I covered this morning. And then we have new macroeconomic data. This time is from the economic calendar, the ADP jobs report shock. At 8:15 a.m. ET, we have minus 32,000 jobs. Private sectors lost jobs. Previously, plus 40,000. 47,000 actually, and I think they're manipulating those data. I don't even believe that the previous was 47,000. They probably manipulated the number. Now the 32,000, it might be even worse, because I feel like everybody's talking about people losing jobs. This massive miss signals a rapidly cooling labor market. It has virtually locked in a Fed rate cut for December 18. We're talking about bad news is good news. Okay, so bad news on the jobs is something that forces the rate cut. Now, remember that there are a few occasions in the past where that sentence of bad news is good news breaks, right? If something breaks too big that they have to cut rates by 50 or more because something big broke, which they might be trying to cover, then you get recession. You don't get necessarily always with a rate cut upside. So be careful what you wish for in this case. ISM services PMI at 10 a.m. The actual was 52.6, expansion forecast was 52.1. The impact, the services sector remains resilient despite job losses. This mixed data, weak jobs, strong services create a Goldilocks scenario where the economy isn't collapsing, but the Fed still needs to cut rates. Ideal for risk assets. So basically, we got now an S&P that is moving higher and is probably dragging a Bitcoin with it. There's not always necessarily an immediate correlation, but there is some move into the upside. I'm going to say that for the short term, I'm going to privilege what we are seeing in the move. as we get into 100K, if we get there, things can get a little bit shaky and turbulent. We don't know if we're gonna cross that 100K. But one step at a time, guys. I think if you are in a swing trade, if you are in a long, still this is looking good. If you want a line of protection, we can put a line in here from this bottom on the RSI daily, and then now we can officially maybe move this into 36. Actually, it shouldn't be 36. Well, that's if it's a sharp decline, right? If you fall very fast. I think if it does something more around the timing of the previous swing, it should be somewhere around the 40, because it should take a bit longer to get there. But let's go into the reverse. Let's put that 40 and let's update that next support, and let's see what we need to defend in the upcoming days. And that is 87,600. That's a bit lower than what I was talking about. I was talking about that 90, but well, I guess we can get that support a bit lower. That 87,500 is the level to defend. If we get a rejection in here, that is similar to this 83, it will mean that we are producing a triangle that has a sloping support upwards. It all depends on how we close this candle. I think if we close at 93 going into 87 is a little bit too low, but we'll see tomorrow morning how the price changes, and I'll give you an update, of course. Guys, an update from my Patreon. I just finally managed, after months, to get Patreon to enable yearly subscription. And so that is available from now. You can go to my Patreon, and I'm giving a 40% discount the full month of December to anyone that gets that. People are discussing how to move from monthly to yearly already. Someone found a way. You can check that in the Patreon, or ask someone in Telegram as well. So that's available. After December, in January, it's going to go to 20% discount for the yearly. So take advantage of the 40 while it lasts. And I'll see you in the next video. Hit the like, subscribe, write down a comment down below, and I'll see you tomorrow. Bye-bye.